starting. So yeah, today we're gonna be first of all drawing the 150k My Funded Futures Challenge giveaway winner. And yeah, well, so back to what I was talking about this morning. Last time I was at the charts, I saw this massive drop here on the SNNQ. We tapered it perfectly inside the tapering chat. Of course, not everyone's able to trade the London kill zone, so let's see. I'm really curious to see, what's about to happen. We looked for the potential head and shoulder setup right here. It was just an idea at this point. Right here, I used the inversion fair value gap, continuation into this fair value gap. And then essentially, after we've hit that, move my stop loss to break even. And then I saw this invalidation of the highest bullish fair value gap on the retracement, still thinking about the head and shoulder setup right here, where I took the short on the inversion fair value gap. Looking for partials and these two hourly fair value gaps to be filled in. So we made decent profit this morning. Let's check out where we're at right now. Let's start with ES. Alright, so that's our main partial from earlier. Profit target has been hit. We're right now inside a hourly bearish fair value gap right here. Let me get rid of all these drawings. Don't need them anymore at the moment. We also took the short on NQ, even before we saw the head and shoulder setup. We were just looking at NQ, knowing it's at the all-time high above this red line, which represents the previous week's high with the ICT all-in-one indicator. Then we also saw it forming a higher high. Going back over to ES, we saw ES didn't form that higher high post 2 AM. While NQ actually did this is too, and we formed that higher high at 230 on ES at 230. We didn't form that higher high, we fell short of it. So we even had SMT divergence at the high, using our highest bullish fair value gap after we closed below it right here at 3 AM London Open as resistance. Give us the retest where we initially engaged on the shorts, looking for short-term low sell-side liquidity, leaving behind a nice bearish fair value gap, coming back to retest it and the previous week's high level right here at 18,145, continuing lower towards the VWAP and the midnight level. Personally, I will see if I find myself in another trade today. Not very sure about it just yet. I'm going to be waiting, well, certainly I'm going to be waiting for the 10 AM news event to see what's about to happen. What could likely be happening. Let me get rid of my executions here. Let's take a look at the hourly. Do we have hourly analysis? No, we do not. Into a folder, find it here quickly. So up until news, I'm not going to be trading or doing some tape reading analysis. We just let it play out, and 5 minutes ahead of the news, we're gonna get started. So let's do a little NQ markup. Previous week's high. Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, previous week's high right here. Our final manipulation to the downside, standard deviations ICT. We also looked at that on ES already, where we usually look for 4 standard deviations to the downside of our last and final manipulation move right here. 4 standard deviations have been hit right here. Then we started to retrace, essentially giving us another final manipulation right here. Moved a little bit lower than that, and eventually even saw, let me go to the hourly time frame here. Also hide my executions. SMT divergence between ES and NQ. Right here we see a low and a higher low. on NQ we actually saw a low and a lower low, so we had massive SMT divergence right here, which gave us good confirmation that we're likely going to reverse higher. This was last week Wednesday. We pushed back up into our previous week's high after taking out the previous week's low. Tuesday, Thursday, Friday, yep, previous week's low. Just to understand where we're currently at, we're going back over the last 2 weeks. Then once again, we look at our final manipulation right here. Our last lower low, lower high, lower low. We measure that out to the top. And once again, we land right here with 4 standard deviations. We hit that target. New week started. So this is Friday, Friday, Friday. We took out the previous week's high. It's actually where we caught a very nice setup last Friday round of the bearish Fair Value Gap into lower targets on the hourly time frame. And since then, this is the new week essentially. All we did was chop and slowly retrace lower, taking out lows, 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 lows for a last time. Filling essentially this daily bullish Fair Value Gap right here. Filling this one in. This is our daily bullish Fair Value Gap. Put it into perspective. So we retraced in some sort of a bullish flag pattern, if we want to call it that, leaving behind lower high, lower high, lower high, lower high, lower high, which we very quickly cleared yesterday at 8 AM, where we had I'm not sure what news event it was, but there was a news event. So once again, now we would be looking at our final manipulation to the downside. By that I mean, check the time, 43. Lower low, lower high, lower low, market structure shift right here to look for potential standard deviation targets to the upside. And we could anticipate price to expand up to 18,350. Let's round it up and make it even. After retracing into the daily Fair Value Gap, let's see if we retrace to a specific level and look at the PD array. Now we didn't make it into a discount of this entire previous week's range. We actually mark up the previous week's low. All right, so just based on that analysis where we went back 2 weeks, seeing that retracement and that market structure shift right now, we're in bullish order flow. No questions about that. Let me just quickly check ES as well. See what we're up to here. All right. So our current high of today would be coming in right here as buy side liquidity. Thursday, and Friday started right here. We already had our London session drop. So right now, just based on the hourly time frame, what I'm interested in is this potential inversion Fair Value Gap overlapping with this bearish one right here. So let's mark that up. Value gap 1 hour, make 12. Let's actually not look too much at the inversion Fair Value Gap, because that 1 hour bearish Fair Value Gap should be good enough. I would prefer using the highest bearish Fair Value Gap, which would be this one right here, or inversion Fair Value Gap, sorry. Our highest inversion Fair Value Gap right here, we actually formed a higher high, a short-term low, and another higher high. This essentially would mean we shifted market structure here to the downside. So I want to see if we are going to invalidate that and continue higher into our anticipated standard deviation targets based on market structure shift on Thursday, essentially. Or if we're going to reverse and continue lower from here. In that case, we would look at sell side right here at the current low of today. Sell side, sell side, sell side. And our previous day's low. Right here. Actually also our low of the week, so let's make this one purple. Week started right here, Monday, Tuesday, Wednesday, Thursday's low. Currently the low of the week. This is our high of the week. Gut feeling wise, I'd say we continue higher, but let's wait for the news candle and see what we can anticipate. There's no more buy side above here because, yeah, essentially we're at the all-time high right now on NQ. Talked about that a couple of times. So going back to the hourly, are there mainly any questions about this markup? Let's maybe start with that first. So just based on that, we would be looking for, well, based on this, higher prices. There's one cool thing. See if we can actually use that. Not very interesting, where we look for that final manipulation and then we look for potential targets when we could see the final expansion by using the FIB projections. See if it worked here. Looking at that final manipulation, also not really. See if it worked here. No, let's just ditch that. Forget I ever brought it up. Just something I saw on Twitter. We have 11 or let's say 12 minutes left before we get the news candle. We completed our markup on NQ. Actually, put it all into a folder and save it. Save the template. Look at the daily time frame, get rid of the hourly analysis, and quickly do some daily time frame analysis. So our first day daily candle, bullish engulfing candle. Yeah, honestly, at this point in time, I would anticipate the continuation more. Also, yeah, because of what we just talked about on the hourly with our standard deviation target, we've seen how perfectly that has played out most recently. Final manipulation for standard deviations, final manipulation at the high for standard deviation target, final manipulation at the low for standard deviation target, and then we retraced. After this, yeah, we could consider it choppy environment, at least on the higher time frame. On a lower time frame, we're still able to catch great opportunities, in my opinion. So just based on that, would be looking for the expansion higher. Daily time frame without looking at any economical things or any of that stuff. So that's our daily bullish fair value gap. We can see we hit the consequent encouragement. Daily bullish fair value gap. Just a rough markup. Where's the 1st of April? Yeah. Settlement prices. Not we're gonna use settlement prices, that's for sure. So on the daily time frame, let's mark out some more bullish fair value gaps recently used. Right here we have a perfect example of a daily inversion fair value gap. It was the beginning of the year, so let's also mark that up. 2nd, 27, 29, 2nd of January. This is basically 2024 Q1 2024, where we were looking essentially at our previous, let's not bring that up. Otherwise we end up going too deep. We have 9 minutes left before we get the news candle. 24, inversion fair value gap, continuation higher. Tiny little bullish fair value gap. That's mainly where we chopped around if we look at the hourly time frame. This is all this price action. Daily time frame. No, it should be fine. So let's put that into a daily folder. So now if we're on lower time frames, we can simply look at our daily fair value gaps without having to, I don't know, having them active on our chart at all times. So if I want to look at the hourly analysis now, I can actually do that. And also go over here into the settings and go to visibility and say I don't want to see the hourly analysis on any time frame higher than the hourly time frame essentially. So now if I head over to the daily, that's automatically disabled. 1 hour time frame. And right now, ahead of the news event, or the end of the week, still playing inside this hourly. Get rid of all this stuff here. We have a similar analysis here on ES. Also using our standard deviations for targets. Worked even better. Final manipulation, tap the perfect low, reversal back up, hit our 3.5-4 standard deviation range. And so far we have SMT divergence because S&P did not take out the previous week's high just yet. So we're also going to keep an eye on that. Previous week's high. I wouldn't be surprised if we get a full-on expansion after the news. But first we have to wait and see, assess what we could anticipate. Hourly fair value gap, that's our market structure shift. We have a more recent one. Here, 2 standard deviations, 4 standard deviation target. So I'm going to be marking this out right here. We don't do that, and if we fail, then I think we end up with SMT divergence at the all-time high right here, even on a daily time frame. And we could be looking for a reversal back down to these targets. So right now, here on ES at least, didn't take out that high just yet. We could argue, okay, which hourly market structure shift is the most recent one? Most recent one obviously is this one right here, but we also have a conflicting one. Higher high, higher low, higher high, market structure shift, retracement into the optimum trade entry. But we failed to really sell off here and reach those standard deviations. We essentially hit 1 standard deviation to the downside, and that's when we started to turn around. Like I said, we still have that previous week's high as a potential target with our hourly bearish fair value gap. Good NQ, it's 56. Let's put all these hourly analysis folder and see if we have some questions on Discord. Looks like a nice position for a small short. Well, I'm not going to play the news. Let's take a look at the lower time frame now. See where we're ending up with. Just in case, I'm going to be opening up my MT5. High stakes challenge. Again. There we go. But this week we had a real good week, a real good one, especially during London. So yeah, well, I will leave it up to a potential setup to tell me if I'm gonna enter or not. So now let's break it down to the 5-minute. Turn off the hourly, and our ICT all-in-one indicator is gonna do the rest of our chart analysis. Previous day's high has been cleared. So far, wouldn't really say we missed anything by doing our higher time frame analysis on NQ. To the Greece indicator, let's see what news event we actually have. I think PMI news. ISM manufacturing PMI and consumer sentiment in 1.5 minutes. So the only thing I want to point out ahead of the news event is that I think would still like to continue to the previous week's high. We had could see a potential low of the day in place. So far, all we did was retrace out of this. We took our short, or I took the short entry on ES right here based on this inversion fair value gap, and then retest right here on this candle, securing most of the profits at the Asia session low, and my final profit target was at the low of the day. Once we've hit that, all we've really done was continue a little bit lower, then essentially bounce and move away from that, actually respecting bullish order flow here nicely. We close above the lowest bearish fair value gap, turning it into a inversion fair value gap. Paired with a bullish fair value gap right here. So nice overlapping confluence. Forming our first lower low, lower high, higher low, higher high. This is that break-in structure we're looking for in terms of our price action confirmation. So we make a bullish one, and from here on, after our London session, we actually continued using bullish fair value gaps and bullish order flow to deliver prices higher. Yeah, okay, there goes the news candle. And the previous week's high likely. You can see that on NQ we actually closed above the hourly bearish fair value gap. We took out the all-time high again, this buy-side liquidity pool. Let's see if ES can follow. ES managed to clear the high of the day, but not the previous week's high, this red line coming in at 5123. That's why you don't. Right, yeah, depends. Maybe with a higher risk account, but I wouldn't be doing that on my funded accounts. Let the news play out where we look at past order flow. 6 a.m. Another bullish fair value gap left behind. We use it as support, continue higher. And we can also see that we actually never close below these bullish fair value gaps on our move to the upside. Right here, this was the first time when we really saw a potential change in state of delivery after we closed below our highest bullish fair value gap right here. And then essentially we made no higher high after that anymore and actually retraced into lower bullish fair value gaps right here. Consolidating, 9 a.m. new hourly candle, we push to the upside. New York opens up at 9:30 right here, retest the midnight level. And then prior to the news, we chop around at the VWAP. Took the high of the day of both the S and NQ. On NQ, actually the all-time high. Mm, 402. Let's see. Did anyone play the news candle? I'm gonna quickly fill up my water bottle and then I'm back. We have 1.5 minutes left before that candle is closing. All right. Not live on my simulated yet. Nice. What trade did you take? Did you take the long? Short? 25 seconds to go before the candle is going to close. Let's take a look at it on NQ. NQ on the 5-minute time frame actually looked more like a long. Holding nicely above the VWAP, bullish fair value gap right here for the continuation higher. Nice. But yeah, I don't know. Me, Cartio, RM this morning, we took the London session short right here on NQ, which was really simple. Very easy trade. I don't know, I'm not really looking forward to take another trade. Like I said, it would highly depend on the setup. Seeing this huge wick on the S already makes it less attractive to me. On the 1-minute time frame. Now let's see. Need a nice fair value gap in order to enter again. Usually for me, On Fridays, I'm already pretty exhausted from the entire trading week. And when I'm exhausted, I'm not performing at my best. Not sure how you feel about that. But yeah, Fridays for me, I say it so oftenly, are more about capital preservation than generation. Since we already generated a lot of capital today, actually, during London, I need a good setup during New York in order to even get tempted to risk again. One of the most important things for me on Fridays is to, well, leave the charts in a good way. Doesn't always necessarily mean profit, but well, just not with excessive drawdown or me losing control on a Friday, because that's just unnecessary emotional baggage that I carry on with me over the entire weekend. And once I start trading again on Monday, it still affects me, because all I think about is making back losses, essentially. Not a big fan of that. So you already had a good Friday. Doesn't matter if you made money or not. If you followed your plan and had a nice execution, yet it didn't play out, then yeah, well, so be it. But not worth messing up on a Friday. Sometimes you feel like you don't trade enough. Interesting that you bring that up. And Q keeps on pushing again. Would still look forward to see that previous week's high take. Now wait for you, Fady, to write your message and then we get to it. Because it's a good one. You didn't make a higher high just yet. I don't know, I just feel sometimes I'm almost too conservative, but don't want to overtrade and make excuse if it doesn't go my way. Well, yeah, it's a fine line between overtrading and taking exactly the right amount of trades. That's also, yeah, very unique to each specific trader out there. So there's no right or wrong. Essentially, I don't want to bring it back to journaling because most of the time I end up saying, well, journal it and figure out what works better for you. Taking many trades, managing your risk very well and ending up with profit at the end. Or if you perform better by, yeah, holding back most of the times, which isn't necessarily a bad thing. I mean, theoretically, we could jump into a trade every second. And I think that journaling part helps me, because if I have to journal a trading day where I go long, short, long, short, long, short, just based on my gut feeling, it's a lot of work, and B, tends to be not most profitable trading days for me. The most profitable trading days are actually the days where, like for example today, where I take 1 to maximum 3 trades and all of them are winners, or maybe just my first one, like this morning here on NQ, the super easy short of the inversion fair value gap right here at 3 AM. followed by a break-even trade with small partials. Once we inverted this fair value gap, I looked for a nice bounce off the VWAP after seeing wicks below it. And then this nice pin bar candle with no wick to the upside back up. Got in on the inversion fair value gap right here at 5108.5. Took some partials in this bearish fair value gap, and then we saw, okay, we've rejected here. Moved my stop loss to break even at this point right here already. Stopped out at break even, invalidated the bullish fair value gap, and at this point in time I was, well, if we were really to continue higher, we would respect the bullish fair value gap, and then I simply entered short, going with the flow. So all up, I took 3 trades. Some people would already consider that over trading, if you, depending on their trading plan or edge or whatever. So it's really a very individual question that you essentially have to answer for yourself. If you feel like you could make much more profits by simply taking more trades, then keep doing what you do right now and use your paper trading account for that. We could actually get started today on the Leap account, so I'm going to log into that. Just see what works out better for you. I know that you have a very limited amount of time where you can actually trade in or within. So you can't, if I go past 3, it gets ugly. Yeah, the same thing for me. That's why I know I still like to take many trades, and I know the feeling of, me not taking enough trades. I sort of, found a little workaround by having multiple accounts. So I have one account for the London session and more than one account for the London session actually. Over time that also grows. And specific accounts for the New York session, because I don't like to carry over profits or drawdown into the next session on the exact same trading day. After a good night's sleep, it's all good again to risk yesterday's profits or get out of yesterday's or last couple of days drawdown. That's not an issue. But yeah, I don't know. That's my little workaround on feeling like I don't take enough trades. So right now I would be trading on a fresh account again, on my 5%ers account actually, which is also doing pretty well. But yeah, if I would have already made profit on that one during London by taking these shorts, well, would be slightly biased. On the one hand, I wouldn't like to give away the profits I made, because I already have been on lunch break and I've settled that I made 1%, 2%, 3%, 4% profits or 2% in drawdown. That already settled. And yeah, risking that again, I don't really like that. So I like to start fresh on a new account. You put a lot of effort in accumulating as much trading capital as possible once you have some fun at account, or you don't care that much? You mean accumulating as much trading capital as possible on one single funded account? The answer to that would be no. If I make profits, I immediately withdraw them and I basically move on from the account where I made profits. Let's say I start out, let's say right now in March, trade one of the Apex funded accounts or the take profit trader accounts. I make some profit, and typically I don't like playing with that again. With take profit trader, the cool thing is I can request daily payouts. That's nice, but right now the main focus is on getting CFD funded accounts, and over there I would do the same thing. With funding pips I can request weekly payouts. Currently I have 4 accounts in total with funding pips, and the goal is 5 accounts eventually, not copying all of them, but if I make profit with the account on Monday, it's usually 1 or 2%. I leave that account where it is and wait for the payout window to request a payout, and on Tuesday I start trading with the second funding pips account, and so on. So I don't try to push my funded account balance to the max. Let's say, for example, you're on a 100k account to get it all up to a 30k payout on one single account. I prefer taking my small profits because essentially they also accumulate. And see, NQ is really pushing higher in terms of targets. We would simply turn on our hourly analysis. 18,300. If we manage to expand into our deviation target zone. And while I wait for, basically the payout, I usually already have a new account that I'm trying to get funded, and then the entire cycle continues. Of course, you could connect them all, but well, I don't think I'm at the right stage yet with the amounts of accounts that I have to connect them. Also, the funding pips account can't be traded with a trade copier, so you can't copy from a. You will be able to copy trades between funding pips accounts very soon. I'm also going to take advantage of that, but you can't copy from a funding pips account to a 5%ers account, for example. Yeah, of course. The goal is to acquire as much funding capital as possible. But what you said, that having $1 million worth of funded accounts copied together, take one trade with 1%, and that's essentially 10k. Yeah, no, I prefer having all these accounts but not connected together. I don't think I'm at the stage yet where I feel really comfortable doing that, knowing that I take the same trade on all my accounts. So even if I lose one, because let's say, for example, I lose myself, I'm on a losing streak, and I just want to get back up into profit, and we all know what it's like sometimes. We lose once, we lose twice, and then essentially we start getting on a roll and we don't stop, even though we know that what we do right now is not acting in our own best interest. So if that ever happens, yeah, I lose one account, but I wouldn't lose all accounts because they're connected with each other. And that still happens sometimes to me as well. I read the message that name haven't been around for too long. Someone put in the accountability chat. It's natural. We are all human beings with emotions, and blowing your accounts based on you losing control, and you just keep on trading just to get it back into profit, while actively knowing that what you're doing right now isn't the best idea or the best thing you should be doing at this point in time. Best thing you could do is to actually stop, but stopping with that kind of drawdown is also very hard. So it still happens to me sometimes. I try to avoid it as good as I can and control myself. But the most important thing for me is that if it happens, I still have backup. 1 second, guys. No real fair value gap that we could be using here on the 5-minute time frame on NQ just yet after 10 a.m. Even though I basically outlined that I think it's gonna go higher, it doesn't mean, I don't know, usually we're all risk managers, and by the end of the week on Friday, my willingness to risk is usually at its lowest point compared to Monday. I need that, yeah, I don't know, the weekend in between where I can really say like, hey, it's time to relax again and start fresh again on Monday. But on Friday, I do feel depleted. No questions about that. Most of the time by Friday, I'm already in profit. And yeah, not a big fan of giving that away, especially if I already feel like I'm depleted. I'm in terms of mental capital. Last Friday, for example, was a great example. I can go back to that very quickly. On NQ and yes, last Friday's price action, Tuesday, Monday, Friday, right here, we saw a quick run up into the previous week's high, had our highest bullish fair value gap. We had our standard deviation targets on the hourly time frame. This is this orange box in the background. We saw price invalidated the highest bullish fair value gap. We got in on the retracement right here, targeting continuation to the VWAP, and essentially one of these lows right here for a nice 2-to-1 risk to reward ratio. And afterwards, we also saw the same setup on ES. If we go back to Friday, but we consolidated for a little longer. We had our highest bullish fair value gap. Eventually, we closed below that, and we came back to retest it. But yeah, at this point in time, those are the easiest trades in the world if they would happen. Yeah, not on Fridays. That might also be because I take quite a few trades throughout the entire week across all my accounts. That's why I might feel depleted. If you only take a couple of trades per week, then you might not feel that same sensation. But those easy setups on Fridays, they're actually pretty hard for me to take. If that makes any sense, or if that's insightful to anyone listening right now. That on, I could go to bed right now and fall asleep. Would have no issues with that. That's right. So I'm on the paper trading Leap account, but I can only trade the S&P 500. I cannot trade the futures contract. Yeah, let's screw that. But I'm curious, how do you guys feel like on Fridays, especially then the AM or PM session after already going through London session maybe? Do you guys feel that same sensation maybe, Katio? After trading London and New York for the entire week, that Fridays, that you feel a little bit exhausted? We use the highest bullish fair value gap. I would still anticipate the previous week's high and the all-time high essentially to be run here on ES. But in terms of stop loss placement, this would be a little wild to say that we're gonna enter right here and place our stop loss at the VWAP, maybe for a 1-to-1. Yeah, that would have worked. Well, it works out, of course. Doesn't mean that just because I place my stop loss at the VWAP that we're gonna get out of the VWAP, out at the VWAP. If I see the highest bullish fair value gap being invalidated, I usually get out with 50% or less in terms of my expected anticipated loss. So I fine-tune my, at the moment at least, mainly 1-to-1 or 2-to-1 risk-reward ratio strategy. Fair enough. Yeah, bullish we are. Definitely. Not gonna get lower than the 5-minute time frame, but I'm sure. Nice, good job, Agent Smith. Oh yeah, sorry guys, I'm just feeling super tired today at the end of the week. That's why, just for myself, I don't have to say, or my usual risk appetite. I could see myself here on Wednesday, Tuesday, knowing that we have good buy side above the all-time high here, essentially. Take this highest fair value gap, place my safety stop loss just at the VWAP or the midnight level right here, and look for that simple 1-to-1 risk to reward ratio target, or 1.3 actually, because I know that, well, if we close below this bullish fair value gap, I could get out, well, at least below the 50% right here. Maybe I do 60% of my, let's say, 1% risk right here, if this is 1%, and I get the invalidation of this highest bullish fair value gap somewhere around here. I lost like 20%, 30% or 50%, but I rarely lose the entire amount that I risk. Let's see if we hit that target eventually. Because theoretically, it's just the same thing over and over again. Having a good gut feeling about drawn liquidity, in this case, the previous week's high. A nice setup, usually including a bullish or bearish fair value gap, or a inversion fair value gap most recently at the high or low of the day, and then just rinse and repeat, paired with good risk management. Agent Smith, do you have to pay an activation fee with trade day? So I remember last time I traded with trade day, they did not have an activation fee. And data fee, okay, interesting. I think they changed that, yeah. No, I don't think it's a very profitable business model for futures without the activation fee. What's the time? It's 4:30. So we're at the half-hour mark of our SilverBullet hour. Right now, we've formed SMT divergence. Higher high. Well, hard to call it SMT divergence, but post 1020, we did not form a new higher high on NQ while we did on ES. And usually what we tend to see at 4:30, price likes to turn. We've covered that multiple times over the last month. We might even witness it right now. See, 23 seconds to go. We're back on the value gap. Previous week's high. Ended up holding though. Let's see. Theoretically, I would still be in this long, but yeah, I'm gonna leave it at that for now. I still would think the previous week's high is a good draw on liquidity. No, I'm not really interested in anything right now. I'm just observing it. Potential would be there for a inversion fair value gap setup right here once we close below it. But would have preferred a previous week's high to be run by then. 52 seconds to go. Let's simply wait and see how this candle is going to close. It's also just 10:35. Got our turnaround at 30. And yeah, 10:50 till 11:10 would be the macro. Let's see. Didn't close below. I'll open with another bearish volume imbalance here, essentially. Closing back below the previous high, previous day's high, but not below the bullish fair value gap just. So still wait and see. Today's not going to be the most entertaining live stream. At the beginning, we did great work with the markup, looking forward, or yeah, basically anticipating the news candle move to the upside and to the buy side. From here, I would just, I don't know, I still feel like higher prices. If you are keen on taking this fair value gap long, you don't need me to be in that same trade right now. I just don't feel it. On Friday, I do my risk management, you do yours. But yeah, as long as we don't close below it, we're good. Use a nice wide stop loss and adjust your risk based on it. You would essentially have to do it with micros to manage your risk properly. We ended up holding nicely. Did anyone take that long? 15-minute time frame, 15-minute bullish fair value gap here on NQ. 5-minute time frame, no fair value gap because of this long wick here at 10 a.m. 1-minute time frame holding. Lowest bullish fair value gap of this price leg right here. Higher high, higher low, higher high. Did anyone take it? Like I said, I just don't feel it. Not specifically this trade, just don't feel like risking it all today after this great London session. Only on Evo since London again. Yeah, exactly. Not on the important accounts. Let's call it that. And right now I only have important accounts, so well, the 5% account is a challenge, but like I said, on Fridays I just feel depleted of my willingness to take risks. The second time, yeah. This week we actually had a very good London week. Cannot complain about it. See if we can find a movement to the previous week's high here. Here goes NQ again as well. Let's hit it. See what that would look like here on the S&P 100. It's the fair value gap. That essentially would be my stop loss. Once the futures contract hits the previous week's high, would be out. Or yeah, I'd simply wait for my 1-to-1 to be hit. This. So even if we would have seen a close below the fair value gap here on the futures chart, I would have simply closed my entire position and thereby, yeah, save 50, at least 50% of my entire risk. I've learned my lesson at the top here last week with price at all-time high. Probably best I stay away, let price do its thing. Yeah, at all-time highs or within a bull market, being long, you're most of the time on the safer side, unless you see a very clean short setup, like we did this morning at the high of the week, high of the month, high of the day, right after the Asia session. Here over on NQ, all-time high, nice reversal setup, and I took my profits at the midnight level. and here on sell side. I don't always look for these massive reversals because it's kind of what everyone is looking for, and I end up making more by taking my small bits and pieces out of an entire move than catching the entire move. But yeah, then it might just be better for you to switch over to paper trading and practice. Do your paper trading journal, and especially if we trade at all-time highs and you're not really sure what you're doing about what you do. Another nice volume imbalance here. See if that one delivers that final push. Yeah, I know what you mean, Cardio. For another, yes, 5-minute fair value gap opportunity. But since I already didn't take the first one, I'm not really sure if I should take the second fair value gap retest right here. Like I said, in terms of risk, I'm depleted, or willingness to risk. Week has been one of the most profitable weeks so far this year, and yeah, I'd say I achieved my weekly target. I won for 5-minute fair value gap 5117.2. 117.25. I mean, this one right here. And we'll see if we get the retracement into it. We just filled in this volume imbalance, retesting that previous candle's closing price, and continue higher. I think for today that's just going to be a paper trading / journal New York session for me. Later on, when I do my journaling today or for the end of the week, and then I recap it on Saturday, I think. See if I made some obvious mistakes this week, but this week has been, yeah, like I said, a very good one. The only thing, well, not really in my control. I just feel depleted, not gonna lie. Would have been to take this long of the first bullish fair value gap after the news candle with a pretty good draw on liquidity. Previous week's high / all-time high. Entry would have happened right here on this bullish fair value gap. We never closed below it, so we also wouldn't have closed the position. We actually ended up holding support here. Yeah, and so far doesn't look like we're gonna get another entry on this price leg before we hit the previous. Of course, you could simply place your limits or limit orders here. But already seeing that we perfectly respected this volume imbalance, retesting that previous candle's closing price and immediately continuing up higher. Already kind of confirmed that we're gonna visit the all-time high first before potentially revisiting this bullish fair value gap. So the only entry that would have been possible would have actually been the volume imbalance continuation entry, which is a rather risky entry to take. Not risky, but more aggressive, because you don't wait for the actual retreat. Go at our previous week's high. Nice. Target would have also been hit. Chart in Q also formed a new higher high. Let's see if we actually break out and really push. We still have our hourly targets to the upside based on our final manipulation to the downside. Three and a half standard. But I think the rest of it will be delivered next week. So yeah, here essentially no entry other than a aggressive volume imbalance entry or the first fair value gap after 10 a.m. We watched it closely, we never saw it close below, so in this scenario, since it's our only bullish fair value gap, if we continue into this draw, that's what we said, we would expect support right here. Would have seen a close below. We could have even targeted the potential inversion into short-term lows right here. Never happened. And we managed to get our previous week's high. Now it's 10:55. We get a new hourly candle within the next 2 minutes. And see how we go from there. There's no SMT divergence anymore. Repush. See what the next hourly candle has to offer, but that's also going to be the end of the live stream. So if you guys have any more questions, that would be the perfect time to ask me. Like I said, I'm already feeling depleted for the week. I've accomplished my weekly goals. Now the only thing left to do with trading is for the weekend is going to be journaling and my recap. So questions. It's time to ask me questions. Yeah, see you on Monday. I'm already excited again because I know that, well, on Monday I always start fresh. And on Fridays I'm more conservative, especially if I already achieved my weekly goals. Otherwise, yeah, this would have been a great setup to take. First bullish fair value gap. And there's also That's why I can take these setups. I don't place my stop loss here, and draw this up. I don't place my stop loss here, saying that, well, I'm only gonna get out of this trade. My stop loss is being hit. I'm not that stubborn. I have my entry fair value gap criteria right here. That's the fair value gap I entered based on right here at 10.20. We see it push. It's coming back. So at this point in time, we would have either been stopped out at break even, very likely, because yeah, Fridays I don't want to risk much. Formed a new higher high, so I'm already at break even. Stopped out at break even, then essentially just to watch it continue higher from here and hit our target, which would have been a little bit annoying. And if something's annoying us, that's usually a good trigger for our ego to keep on trading and prove it that we theoretically we missed out on something, at least missed out on something. That's what our brain tells us most of the times. Then we take another opportunity, lower quality opportunity most of the time, just to prove ourselves. Well, didn't leave something on the table today. But in this scenario, just because my stop loss is here doesn't mean I lose the entire percent if I'm wrong. That's the worst case scenario, but that only happens, I'd say, 1 or 2 times out of 10 trades that I take. Most of the times I get my exit above the 50% of my entire risk. So if I risk 1% here, majority of my losing trades actually end up losing less than 0.5 if I have a good entry fair value gap to take on. Once I see the close below, I can get out maybe at 20% loss, 30% loss, or 50% loss. Just all the data that I've collected through my journaling over most recent months. That's what I'm following. But still, sometimes taking the risk is tricky. Even though I don't risk an entire percent if I get out. Yeah, so it's 5 p.m. I'm not going to be trading the PM session today. I'm going to close my charts for the rest of the day. Any last questions? RMH, Smith, Kita, Osman? Feel free to ask. Always otherwise. I see you on Monday for the first London session of the new week. Hey, Breeds. I will announce the winner of the 150k MFFU challenge giveaway on tomorrow. Sorry about that. Or later today, depending on when I get to compiling the list of all VIP members and then putting them into the raffle machine and then picking the winner. So I will just ping everyone in the announcements channel or in the VIP chat for this giveaway. Alright guys, that's gonna be it. Thanks very much for joining in this week. We had a fantastic week. Looking forward to a new month. So yeah, happy to be here. Take care and enjoy your weekend. So we will be back next week. Bye.